Hello, hello. For those that are still out there, we're going to do a quick Periscope, sum up the market a bit, and I'm going to clarify some of my views on the market. So while we're waiting, if people want to give me a couple of stocks to discuss, that would be, well, stocks and topics of interest, I should say. Nobody has much they want to talk about? Here we go. Okay, keep going. Not sure who John is, but I'll assume you meant me, Justin. Thank you. I've had this hat for a little while now. It's been getting a little bit of use around the holidays. It's always entertaining, right? A couple of more. Today's going to be a little bit abbreviated, so I'm going to try and cover some of this stuff in the topics. Okay. All right, I think we have a good amount here, so we can say all bets are off here. Got all I'm going to discuss stock-wise. All right, so we have a good amount of stuff going on. We have the new administration that is about to come in a few weeks. We have a Fed that is going to be turning over soon. You have a couple of actually the most hawkish voting members. I joke around, I call them her mean red, but Loretta Mester and Esther George are both going to be coming out of the voting portion of the FOMC. And I think Charlie Evans is coming back in. He's pretty dovish, and I'm assuming there's going to be an appointee. A lot of people think Trump is going to put someone in who's more hawkish. I don't think that will necessarily be the case. That's not a done deal. I think he might even put someone in who is a little bit more dovish. So that's what's going on in the macro front. We've had some economic data that's, I don't know, sort of a mixed bag. You had a GDP number which came in a little bit hotter than expected, which means growth is accelerating. We've had some mixed bag in the durable goods that always seems to bounce around based on Boeing, but not necessarily so hot. And this week it was announced that GM is going to be shutting some of their production plants for like 5 or 6 weeks in the new year. I can't imagine that being good for durable goods, jobs, or even GDP. The first month or first quarter, I should say, of the new year for like the last 2-3 years has been very, very soft, to say the least. So I'm a little cautious going into Q1. So this week there was a bit of a dust-up with some of the fast money set, Kramer in particular. I want to address that, the comment I made and his response. I was watching on the show, and they were mostly discussing how the market is basically just a buy, and I thought that they were all sort of holding hands for the bulls, you know, like, it's okay, it's going to go higher, everybody, don't worry. And I don't know, it just struck me as a little bit dangerous, so I made a comment, and that was sort of what he fired back at me about. So I wasn't trying to necessarily give them too hard of a time, but, you know, once in a while I like to express my view. Oddly, after that, there was a little bit of a pullback in the tape. Anyway, with regard to technicals, let's cover some of the macro levels first. Where should we start? Let's talk about the ES. How does that sound to everybody? Everybody likes the ES, right? It's sort of like, remember that show, Everyone Loves Raymond? The Fed has we are still caught in a Fed day range, believe it or not. The high of that range was 22.72.5. The low was 22.43. And the VWAP for that day was about 22.59.23, so I just call it 2259 quarter. So we're still trapped within that range, and the futures have now closed for Friday, and they closed just above the Fed day VWAP in the extended 15 minutes. Futures trade about 15 minutes the RTH session for futures ends at 4:15, not 4 like the regular market. So it did close just above the Fed Day VWAP. Let's get into some of the ETFs I track. I like to talk in ETF terms because we're a bunch of mostly retail traders, right? So we trade in things like SPY and IWM and QQQ. So I like to keep it into those areas. SPY is showing a little bit more weakness than the main indices via ES and SPX because it went ex-dividend last Friday. So you have to be, I've been kind of keying a little bit more off the ES than I would normally on the SPY because we're right basically at the Fed Day range. In SPY, we were a little bit below it, but we weren't below in ES and SPX terms. So that's why I'm using the ES. If people are wondering why I usually just only talk SPY, I'm using ES because we don't have that dividend to account for, so I'm trying to keep it apples to apples. That being said, if we want to talk SPY terms, the Fed decision was 12/14, and we actually had what to me looks like it could be construed as a bit of a look below and fail on the 16th, and now we're kind of back into that range, and we're just building out a flag sideways. Let's talk about some key levels here. I'll go over these in a little bit more depth in the weekend review video. I don't want to talk too much. I often find it's hard for me to talk as much technicals here because you can't see my charts. You just get to see my pretty mug. But I'll say this. I have a channel drawn in. Every one of the big indices that we follow, and I'm not talking about the Dow. Nobody cares about the Dow. I wish they would just get this 20,000 out of the way because who the hell? I mean, honestly, I almost never look at the Dow. It's 30 stocks. It's price weighted, and it's frankly it's irrelevant. True traders don't look at the Dow. We look at obviously at the S&P, but the S&P hit a channel high. It also eclipsed I have two time frames that I've drawn in 1.618 Fibonacci extensions into, and people told me I was crazy when I was talking about them. So when people like Kramer say I'm now bearish, I wouldn't say that I'm bearish. I was like the mega bull for weeks and weeks. No one else. I didn't hear anyone else talking about buy the Trump win other than me and maybe I guess Carl Icahn. I didn't have $1 billion to buy the futures in after hours like he did, but I got in. I mean, I had some very, very nice size in terms of longs on, and I talked about getting the 1.618 Fibonacci extension, and I talked about getting the channel high. And we got it, and now I'm a little bit more cautious. I mean, I'm sorry, price is very important to me, as are technicals. Now, here is the difference between what you'll hear from me and what you might hear from other traders. Hitting a kind of a channel high. I had said that I thought we would experience some pullback. But I said it might be hard to actually make money on the pullback because I thought the market could stay stubbornly high for a while. And I think a lot of people have gotten themselves hurt by trying to short the market and not realizing that we were in a pattern that was I don't want to say hard to get lower out of because it's not. It's actually a very easy pattern to get lower out of, but the sentiment and psychology of where the market is right now, the backdrop isn't for, a huge correction at the moment. I think it's going to be more of this more gentle back off for the next couple of days. I don't think I've ever seen a holiday Friday session before Christmas this quiet. I don't know what the end number of the futures contracts were today, but I mean, it was like maybe a couple of guys kicking around a hacky sack in the pits today. There was nothing going on. So let's talk levels and quick trading ideas here. With regard to SPY, we're starting to make some lower highs and some equal lows. So the simple thing to me is if we can kind of break the mini, I don't even want to say a downtrend because today we're now closed over it. If you would have just drawn a couple of, a line in. So my thinking is this, is I think you can use the low from, last Friday we pinned 225s in the SPY, and this week we pinned a little bit higher. So we've been basically unchanged for the better part of a week. I think if you get below 224.67, there could be an opportunity for a right or right out short, but you have the 20 MA literally kind of right below in the 224s, so I don't know how far it's going to go. At some point, I don't know, this is the key. I don't know if we're going to get there by time or by price. At some point, I do think we are due for a 50 MA test. There is some good news and there is some bad news. Right, the bad news is that the 50 MA currently is down at around 218.62. The breakout in the market was 219.60. So, I mean, this thing would have to absolutely plummet to get there to retest that breakout. So we may wind up testing higher. I'll have to see where that would be. My theory is it might be somewhere in the 221s or 222s. That would be kind of like the mini breakout after the retest. We've already kind of retested that area and moved up successfully. If you draw in some Fibonacci levels, and I'll show this all more in the weekend review video, there are some levels down there that I think make a lot of sense to me. I really think the market will be very hard pressed to get below the 218 area easily. I think that area would be some very, very solid support, particularly the first time around. Anyway, that being said, 224.66 is an important level. Anything below there to me would be a little bit more iffy because you'd now be making another low after a lower bounce high. IWM in particular, this is one that I've watched, and I'll tell you, remember when I talked about the entry to the short below the channel, and it was below that double bottom low? I had discussed the 120.11. I'm actually looking at it on the chart right now. I'll show this in the weekend review. It wound up rallying a little bit, and then it broke hard with conviction down to retest the sort of the breakout area. Presciently, I said to cover, I wanted to cover around the 200 MA, but I said I thought we were kind of into some levels, and I didn't want to play around with it. It wound up being really, I don't want to necessarily say it was good or lucky, but it wound up being right. So then we of course talked about the rally long, and I said I thought we were going to see 138 in the 138s, the channel high in IWM, and that happened. I can't even tell you how many people told me what I was smoking, that I thought we would see 138s, and we did it. We did it pretty with some decent conviction. So now IWM is pulling back a little bit. I've shown in videos before that IWM can stay high for a while and be very stubborn and choppy, and to me it's sort of setting up for that. For a right or right out entry, we have a double bottom, an exact double bottom, similarly to what I was seeing on the channel low. And this is now at a range high, so it's even more likely that it would snap than snapping a defined channel. I do think at some point 129.10 will get tested. That was the breakout in IWM, and it's also, if it were to kind of do it quickly, would be the channel low. That being said, we have broken the channel low, so it is also possible that we do break a channel high at some point. If we get over the Fed day high, I think we're going to then get the blow-off rally and prices could really start moving. A couple of things, so entry here. If we have now a bit of a lower high on this week's leg, so we're kind of primed for a potential larger pullback in IWM. I don't know that we'll get it, but I will say anything below 134.81 would be a decent setup. It would be below the 20 MA, and it would be below the double bottom low of the kind of like this consolidation range low of this would then be taking out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days, almost 14 given So almost 2 weeks of consolidation of trade. So I think that could be a quickie short. I don't know how fruitful it will be, but maybe it gets down to that area at some point. So you'd have good trade location there. And then I would say that if you want to be aggressive, you could use anything over 136.75 as a stop, but I probably wouldn't even let it go that high. I would use the 136.12, which is the high of today. Today's high, it's sort of like a trail down stop. And like I said, that's just a quick setup. This market, we're now going sideways in the channel. It's possible we just consolidate here more by time than by price. And we're no longer at the channel high, and then it can continue. I've drawn in a longer 1.618 Fibonacci extension time frame, and that would take us up to 151s. Very, very possible. It will not happen right away. I would love actually to see the correction first. It would be more helpful. Hold on one sec. So that's what I'm thinking with regard to that. Yeah, so the 20 MA here is the key. The Qs, so I noticed something that I had been talking about. By the way, the Qs are still holding above the 119.66. As long as that holds, and this is just sort of consolidation, there's really not that much to see, but if that were to, if we were to sort of start breaking below the 119.32s, then maybe we get a quick 50 MA touch down into the 117s. But this to me just looks like it's chopping. A couple of things that I noticed. One is Apple. I wound up getting out of this thing almost at the high tick of the move. I had been looking for the 118 quarter, but I started noticing, and I tweeted about this, that the character of the buying was starting to change a little, and I wasn't sure if we had. First off, I said I thought we had a large buyer in the market, and I said I wasn't sure if it was a real buyer or if it was just the buyback. What started to get me thinking that it was the buyback was that it would end toward the last half hour to hour of the day when buybacks stop. And I started to notice that the price action intraday was shifting a bit, and decided that it was time to maybe bail on that, and it wasn't worth playing for the last point. The entry was above the 112.39, and I had a call spread on, and I didn't want to risk the thing pulling back on me that close to target. So I booked most of that. The story here now, today was a good looking candle on Apple. We held the 10-day MA now 2 days in a row. So I like the idea of playing today's range. Anything below today's low would be a short, because you'd be below. There was sort of a gap down. Today took it back, and if you were to now get back below the 115.59, I think it could be a short, maybe even to the 50 MA. Possibly even a retail, which is roughly close to that 112.39. The 50 MA is I'll cover this in the weekend video, but it's close there. If we can continue over the 2-day high, then I think we would get up and get to that complete gap fill. But keep in mind, this rallied really from 104, and now we're getting close to the gap fill, and I think people are interested in maybe booking some profits. It's looking a little overbought too on some of the technical indicators that I use. Let's get into some of these stocks. Not ones I cover all the time, but we'll address them one at a time. This Palo Alto Networks, I don't talk about it very often, but these stocks have been grim death, right? The cybersecurity names, the FireEyes, the Cyber, what is it? I can't even remember the name. What was that? I know the ticker. CyberArk. I couldn't think of it. CyberArk, and yeah, the Palo Alto. So a couple of things I see in Palo Alto. One is that you have a potential secure low setup in the last 3 days trade. You have a a hammer low bookended by two basically equal higher lows. And then today you got a little bit up over the hammer low high, 127.22. Anything above that, I'm fine with a right or right out long, and then you could use today's low as a stop. You should not see below that low again. So maybe it drifts back up and you get like a 200 MA test. So that's what I'm thinking with Palo Alto. If you were to lose that low, excuse me, excuse me. If we were to lose that low, then I think we could revisit the all-time low somewhere around the 114s. Thank you. So that's the story. Today stopped just below the 10-day, so if there was a move over today's high, I think you could try long with a stop below the low, and you wouldn't be risking, you basically be risking like $2.50 or whatever. DGX. So I'm watching, I've been actually waiting for Quest Diagnostic to come back down. This stock has a tendency to have these like big runs, and then it winds up having like these large pullbacks. So it's in one of the runs here. The stock looks looks pretty bullish. Like I said, there are periods of time though when this thing doesn't act as well. It's pulled back from the 80s into the 60s many times. It is now trading above the channel. The last pullback was actually a retest of the backside of the old channel, and now we're elevating higher. So this is sort of like in the kind of the blow-off type of move, in my view, with regard to Quest. In the very short term, you're still holding the 10-day MA. As long as you can hold the 10-day and maybe the 20, I think the move is probably still higher. It had a bit of a topping tail on the 1220. The low of day that day was 92.41. Today's high was 92.46. So we're back into that. If you can get back into that range, I'll tell you this, if you can eclipse that high, the 93.57, you'll probably see a hundo in this stock. But if you lose yesterday's low, or like today's low and the 10-day, there's probably a quick few points down to the 20-day moving average and maybe even down to the 50. So that's sort of my thinking with that one. I've been patiently waiting for this thing to have a larger correction, because it does often go through cycles where it has a bigger pullback of like $20 or so. Tesla. So this is doing exactly what I had said this would do. It'd be very choppy in a range. We're still below the 200 MA. I would assume that the 200 MA is resistance until it no longer is. It was a very strong support. It's been resistance at least now on two tests. I don't know, maybe this time 3 times a charm, but you are coming up from the lower range to there. So I really need to see the 200 MA get cleared. I think that this stock is going to have a very hard time really sustainably getting like to highs until they get that capital raise out of the way. So 200 MA is the key in Tesla. BABA acting like poop. Remember, I had been bullish on this, and I talked about getting out close to 110s. I talked about that in real time. It wound up filling because of an IV pop, which would have been the equivalent of a 110 sale, and it didn't even fully get there, but it kind of got there in the options. So that worked out actually really well, and I never looked back. I had some traders that I know were looking for 120, and I just thought it had moved too far too fast, and just based on some of my modeling I had done, I had shown you guys for a while some measured move levels, and 110 was sort of like my stretched one, and it was sort of like I didn't want to look back. It's now, though, pulled back into an interesting area. We're below the trend and below the channel, but we're right at about the breakout point, around this like 86.42 area. The thing that has me a little bit concerned is that yesterday was a gap down below the 200 MA, and then today closed rather weak. So if we lose that area, like if we lose yesterday's low, we could easily see anywhere between 81s and maybe even 78s, which is the big 61.8, where I would be very interested in buying, considering there's a ton of volume around that area. That being said, I don't know that that's going to be a done deal. You have 84s, which is the 50% fib, and we're basically at a gap fill and a retest of the breakout. So this area could technically hold. If we get above the 2-day consolidation here and back up above the 200 MA, I think the trade will likely be long for a move back to like 92s, 93s. If you lose that area of the 86s, I think we'd easily see 84s and maybe even 81s and 78s. So that's my thinking with regard to that. Under Armour, I had some short, I think I still have them on. Let me look. Let me take a quick peek. Yeah, I have Under Armour. I have a couple of short put, very small area of short puts on in this, and I'm just sort of hanging out. I think that the risk of this is maybe to the 22s. 2201 is a big gap fill. $20 is the 78.6. So let me look at this short term. I didn't realize this had come down so much. It's funny. I had put this trade on right kind of at the lows, and it had that gap up, a slight pullback, and then went, and I haven't been following this. This to me looks like it may want to go a little bit lower to retest those lows. So I think Under Armour is probably going to wind up doing a little bit of consolidation. This looks like it just looked into the gap and now pulling back and consolidating. So I think this is just going to remain really choppy until the next earnings cycle. I may wind up actually just taking these off. I think I had been up nicely on these, and now they're actually a smidge of a loss. So I'll see how that plays out. If we start losing these lows here in the 25s, I might just bail on them. I'm looking at UA. I really want to look at UAA. That's the new one. So yeah, this looks like it hit up to the gap test, now coming lower. Yeah, I mean the stock, it's down so many days, it's probably due for a bounce. I don't necessarily know if I'd be pressing the lows. Unfortunately, there's not a reference in this. They split up the stock, so I don't love this as much. I'm looking on a longer time frame. You know what? Let me couch this for the weekend review, because this has a pattern here that is actually very recognizable, and I think would serve us all better if I showed you this in the weekend video. I think that if it can't stay above this basically $30, if it can't get back up above 30, it's pretty vulnerable, and even could see down to the 23s or 22s. So this is a big area for Under Armour. I'm going to have to revisit that one on for my own. I may actually just bail on that. Facebook. The Facebook. Not acting particularly well. It just consolidating in the bear flag. It looked like it was trying to break the wedge. It's now back below. Anything below 1759 to me is still more vulnerable. If you were to lose the two kind of like the double bottoms in the 114s, I think that, wait, what was the low here? 113.55, 114 on the button. I think this would easily see the 108s. Facebook's problem to me is that they reported a quarter and they reported that they have slowing revenues. That's a very big problem for a growth stock. I keep hearing how cheap it is on forward earnings. That's assuming the earnings are intact. A rising dollar and slowing earnings is not what you want to see with a stock like this. I talked about this on, I think what's more helpful with this is to look at this on a weekly. And if you zoom in, you can see that this thing is in a very defined bear flag. And for me, the only way to snap that flag would be to get back up over 124.61. So until we're above that, I'm kind of iffy. Today's close was basically right on the 50-week MA. It might have even been slightly below it. So you're teetering on levels here that are very, very key. I'm sort of in a wait and see mode with regard to that. Boeing seems like it's doing okay. Trump kind of smacked him around a little bit with regard to the Air Force One contract. He's basically got a 2-for-1, which is great for the country, but for Boeing, that's a very, very small percentage of their earnings. It's really not that big a deal. I think that, and now they're in talks for potentially more contracts. So we came up from the bottom. This has like what to me looks like could be potentially an inverse head and shoulders in the stock, but it's moved a lot and it's into the reference old high. This may push through, but I'm suspicious of the breakout just because it's come up so far so fast. I like Boeing as a pullback stock, but I wouldn't buy it until, you know, it maybe pulls back to trend or retests sort of the breakout a bit lower. So that's my thinking with regard to Boeing. I kind of like it, but it's run. Your trade location. If you're first buying it here, it isn't that great. I'm looking at this IBB below 275.40 to me is a little iffy. You have a little bit of consolidation here in this range. If you can get back up over there, maybe there's a play higher. But I think that this is going to this whole industry with what's happening with regard to Obamacare, the repeal, replace, or whatever. I think Trump is also going to be in negotiation mode with the drug companies, and I know a lot of people think that he'll be a little easier than Hillary Clinton might have been, and that's probably maybe not even true. So we'll see how that goes. I think he so far has said pretty much he's been doing what he said he was going to do, and there's no way to sustain healthcare without negotiating some of these drug prices. So I think that's what's been hurting the fact that they may be at like a peak earnings situation. That being said, I like that we have some bottoming tail action down here. I think you can use today's range as a guide. Anything above the high, I like for a right or right out long. Below the low, I like for a right or right out short. So that's my trade with regard to that. Yelp, everyone's all excited about Yelp now. Where were they in the 20s when we were bullish about it? It seems like it's just chopping around. This is basically the levels that it really broke down from. It hit it, it pulled back, and now it's kind of just chopping sideways. So I would need to see a definitive break up higher above that high for a move maybe back to 57s. Anything, I like it long as it holds the 100 MA. If it can't hold the 100 MA, it's probably not going to hold. PayPal is one I like a lot. I think that it's a takeout candidate at some point. It really needs to clear this like 41, 49 area with conviction to float back up to 44s and maybe to see 46s. But my way of playing this is long via short puts. I had been in shares. Now I'm just sort of in the short puts. TLT, someone asked about that one. I have a risk reversal call spread on, a very small one. My thesis on that was just that this thing was going to bottom when on the Fed hike, and we basically are just hanging around those levels. There's a trend line a little bit lower in the 114s. I think it's possible that this has a quick move even down there, but I didn't want to miss the rally if it does come back up. And I would probably just stop out on the short put version of this, or even the whole trade, if we start really losing the low here of this 116.80. That was an intraday double bottom and the double bottom on the of this move. So if we lose there, I think you could use that as a quick stop. I'm not really necessarily interested in shorting this at this point. I'm more looking to kind of like try to find the bottom in this. For a reversal, at least for a rally. I would be interested in shorting a rally, though, because I do think that we have bottomed in terms of yields. GlaxoSmithKline is one that I have some short puts in. I like that it had a slight undercut of the old low, but there's a lot of hammers down here. It seems to me that this one needs to hold that area. If it doesn't, then I may have to bail on that. Why isn't this showing? I have to go back a little further. This area is a very key area. If it loses it, We've got, I mean, like the 36s have some reference lows, but if it loses this area, I mean, it's starting to look to me a little head and shoulders-ish. So if we were to lose this area, it could really see like 32s. With regard to the GSK situation, they have a decent yield here. It's almost 5%. So I think that might be a buffer in that regard. So really needs to hold the reference lows. If it doesn't, it could go lower. So I like it as a row trade right around here. And Netflix. This one seems to be riding the lightning out of all the momentum names. This was the only one of the FANG names that went really up on their earnings. Other than, I mean, Google was up, but it kind of fell apart. This one is just kind of kissing the sky up here around the 129s. My problem with this is that it keeps getting up to the 129s after having like these sort of larger pullbacks, and it exhausts itself. But to me, it looks like Netflix is probably going to want to go a bit higher. The problem is your stop out now is below 110, and that is a lot, right? A lot point-wise. So I think what you could do if you want to be a little bit more safe with this is play it with the 10-day moving average. If you start getting like closes below the 10-day, it's a little troublesome. The big up candle ended at 127.85, so any move above there that sustains should, at this point, now that you've had a pullback sort of the midpoint of that candle and rally, should really go. So I'm thinking Netflix probably goes higher. Anyway, that's my story. I'm sticking to it. I think we covered a good amount of stuff, and I want to keep this a little bit abbreviated because I know we're in holiday mode. If you missed this video or want to watch it again, the rebroadcast will be on my YouTube channel shortly. I'm going to actually upload it now. My Twitter handle is @JustinPulitzer. If you're not following me there, check it out. Thanks so much, everybody. Happy holidays. Don't drink and drive. Very, very safe. And I will see you with the Sunday video. Have a great weekend, everybody, and happy holidays. Cheers.